Hey there, folks. As the video title states, I'm going to be giving you a game plan that can literally make you profitable in 30 days. No clickbait. I'm going to give you just a complete strategy, complete game plan. When it comes to market structure and market structure shifts, most folks understand a few things about that. They understand that you need to have the liquidity run, right? You need to have significant liquidity to frame the deal. But many of you that are watching this in the past have consistently lost money trading market structure shifts because you're missing one key ingredient. And I'm going to give you that key ingredient in this video. What that key ingredient is the opposing draw. That's why you get stopped out over and over again with shifts. And again, like many of you have been in that place where you'll have the sweep, you'll have like the displacement leg, right? You'll have like that fair value gap, you'll have the strong close, you'll have your displacement leg after having a sweep. But it's like again and again and again and again and again, you just get tagged out repeatedly. And then you're left wondering, okay, what am I doing wrong? Why do I continue to get caught in these stop run scenarios or these fake out breakout scenarios? Like how do I establish the real shift? What is the best way to go about doing that? Because what you're not doing is you're not establishing the opposing draw. And that's going to be the big topic in this video. Okay, I'm going to give you that criteria and how you can just skyrocket. I'm talking about absolutely skyrocket your win rate with shifts. Okay, so we're going to go over a few different examples. This can be used in gold. This can be used in currency pairs. This can be used in futures. I'm going to go over an example in futures too. Okay, before we get too deep into the video, again, reminder, I am going to be opening the mentorship back up come January. I'm enrolling new folks like we do every year. The max that I'm going to have in there is 100. So currently, I think we got like 40 or so people in here. So it'll be about 60 more people that I'm letting in. If you do want to partake, there's going to be a link to that in the video description, but also I'll pin it in the comments below. So all the details about what is included in the mentorship is going to be on the site. But actually, there is a few things that I make very, very clear, though, that's new coming up here. I am going to be focused solely on New York session next year. Okay, that's something new because I was doing London, I was doing New York. I'm just going to put all my energy, I'm going to put all my focus into New York session. And another big reason for that is because I'm still trading Forex in New York session, but I'm going to be trading futures next year. Okay, so I'm going to be messing with futures. I'm going to be messing with Forex, both day trades, and also, of course, as y'all know, swing trading. It's just easier to scale up with swing trading. I can only go so far with day trades in the way that I trade. So with swing trading, it's going to allow me to really take it to that next level. So if you also want to be a part of that, I have, we're doing all that in here, which I'm already doing the swing trade deals in here, plugging it in here. I do daily live streams. Of course, everything that I talk about, I talk about it real time, no hindsight before it happens. And I teach it live on mic, on stream, every single day. Daily video lessons, courses, you name it, we got it in here. If you want to be a part of that, there'll be a link in the comments below. So like I said a moment ago, step number one is the liquidity sweep, that a lot of you understand that part. So like, for example, with gold here, where's their liquidity? Like this thing right here came up. You got to understand that there's liquidity above and below each candle. So you see how price came up, and you see how it grabbed that liquidity right there above that previous day's highs. That's liquidity. It also had that imbalance in there too to help assist it, but it comes up and it takes that liquidity. Okay, that's liquidity grab. Now here's the missing piece. Here's what you need to understand. Very, very important. Take out the notepad. Get out the notepad. You need to be taking notes on this. Okay. This fails to displace. You probably heard also the saying that the body tells you the story, the wicks do the damage, the body tells you the story, right? So the wick did the damage, and the damage was collecting that liquidity. That's what it did right here. But when that candle closes like this, that tells you the real story, and that shows an indecision to move higher. So whenever you get this type of scenario, your very next draw on the daily is going to be previous day's lows, whenever it fails to displace through a previous high like that. Took out the high, pierced it, failed to displace, and it closes weak. You know now that very likely your next draw is going to be that low right there, which is Thursday's lows. Whenever this happens, this is very important too. This is something that you really, 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 really need to pay very close attention to, because if you don't, you're not going to get good results. It's important that that candle doesn't take out a previous low either. It's important that that candle, whenever it fails to displace, is to take out, like for example, a low right here where my cursor's pointing. Remember, there's liquidity above and below each candle, so you don't want to see it take out that liquidity. It fails to displace, and it didn't take out a previous low. So now what we just ensured is the fact that this is going to be our next draw on the daily. There's nothing else. I mean, look at that chart. Look at that chart. There's nothing else in there. There's nothing else in there for price to fight off of, for to find support off of. It is literally your next draw. So to go back to what I was saying a second ago, a lot of you get in trouble. You get like caught in fake out after fake out after fake out because you do not have the opposing draw. And I'm giving you that solution right here. I'm going to give you an opposing draw, and I'm going to teach you a little bit more in depth here in a second how to trade it. How to trade this specifically, okay? But this is what you're doing. You have a liquidity run. That's step number 1 with the high. You have the failure to displace. Boom, we have an opposing draw. That's step number 2, and that's where a lot of you are messing up, okay? What do you think you're going to look for now? When you go in there, go to your 4-hour. So we did have this sell side taken here, but what did it do with it? Does this show the signatures for a market structure shift? Like when you see that right there, is that a market structure shift? Of course it is. Whenever we see the displacement, this is the next step, is you on the displacement leg, you want to see a strong close, a strong candle close beneath a short-term low right there, swing low. Strong, see how that candle closed strong beneath it? And you also want to see a fair value gap on the displacement, which is right here. There's a fair value gap. That is a confirmed shift. That has all, on that displacement leg, that has the criteria for a shift, does it not? Sure does, right there. So we have a few things happening. We have the liquidity run. We have the failure to displace, so we know our opposing draw is right here where my cursor is pointing. Okay? And for entry, take your Fibonacci from high to low. There's a premium. You enter off a premium. You're going to enter off a premium marketplace, okay? Because that's a 4-hour shift. Now, when it comes to profit target, there's a couple different ways to do this. I'm going to teach you a couple different ways to do this. You can keep it the simplest way, as y'all know where I'm probably going with this. The simplest way is to just take a 1-to-1 and take it down to literally the next daily draw is right here I just told you about. That's literally the next daily draw. Enter for premium, risk that high, target that low, simple 1-to-1, dust it. That's one way to do it. If you want to keep it just as simple as you can, that's the way to do it. Now, for the folks that just must have a little bit of a bigger winner, that want to have like a little bit of a bigger winner, then here's how you can do this. I mean, there's actually a couple different ways you can do this, and I'm going to give you another example here in a second, because there's a couple different ways you can get a little bit of a bigger winner on these deals. The first way is doing by this. This is a daily Dillon range. See like this leg up right here? Look at my cursor. That's a daily Dillon range. Take your Fibonacci from that low to that high, measure that range. What you're going to do next is you're going to find 50%. 50% is right here. Look for your next key level of support in that discount right there. Why that right there? Because when we have an old high like that inside of an imbalance like that, it's a big level of support, sensitive price point. So that makes that a good PT area if you want a little bit of a bigger winner. Okay. So mark that right there. Same process for the entry. You enter off a premium. So you see enter in here and then look, there's your PT for a little bit of a bigger winner if you want to do it like that. Okay. Or maybe you could take something off right here and then scale the rest out down into that. It's up to you. But again, there's first PT and then boom, comes down and it tags that old high right there. And again, I know it looks like going in here in hindsight, but we talk about all this stuff real time on stream before it happens. So this is what we saw happen. It comes down, tags that old high right there, and then that's where you can lock in the rest. So, I mean, what is that about? If I recall, it was like 3-to-1 if you want to do it like that. So you see enter, look, right there. See that? Exactly, 3-to-1. It can be used in futures too. It can be used in futures too. I had this scenario the other day, and I actually got the scenario right now too, by the way, which I'll point out here in a moment. But you see like right here, let's go back to replay. And you see like right here how this took out that high. You see how that failed to displace? Same signature. Because what it's done here on the daily is you've collected liquidity above these highs and it failed to displace. It didn't take out that low, just barely missed it, so it's still fine, it's still good. And you also got like that fair value gap in there that it never came down into. You see? So you have that opposing draw right there. Takes the highs, let me note it. It takes the buy side, there's buy side above those candle highs. And it collected that liquidity and it failed to displace. That's your next daily draw. This one was a little bit different though. And I'm going to teach you how you can approach this. There's no 4-hour swing point taken. So what that means is it's not a 4-hour shift. But also at the same time, because there was no swing point taken in there, You don't have that serving as any type of support or anything. What you could do then in this scenario is go to your 1 hour and look for the 1 hour shift. So you get the 1 hour shift. There was no higher time frame sell side taken. You got the fair value gap. You got the strong close, the same signature, the same scenario. That is a confirmed 1 hour shift that you have in there. So you see it comes up into the premium right there within that range. And there's the opportunity to get in. Now I'm going to teach you another way to go about doing this. Okay. Of course you can enter like off the premium, target the low, risk the highs I've already talked about. That's one way. Another way that you can go about getting a bigger winner in this type of scenario, if you want to like target a bit more, here's another way you can do it. Price is fractal, remember? What occurs on one time frame occurs on another time frame. So if you got the 1 hour, very simply go down to a 15-minute. Because when it's coming up into that premium, the 15-minute is bullish at the time. The 15-minute is consistently putting in higher lows, higher low, higher low, higher low. So what do you think you can do if you want to get a bigger winner? You can utilize the lower time frame market structure to frame a shift off of. So if the 1 hour is already bearish, like we've already established that it's a bearish shift, and then the 15-minute comes up into the premium, but it's bullish, you can then utilize the 15-minute shift to time it to take it down into this. Meaning, look for the same signature, fair value gap, strong close, you have a short-term low, right there. There's your shift. See that fair value gap? You see like right there, how, because it already came up into a premium. Remember, it already came up into a premium. You got your fair value gap, a strong close, leave that low. See that? That's a confirmed 15-minute shift. So what you can do now is you can do that same process, that same exact process. Enter at a premium, but now it's a 15-minute. See how it came up into the premium right there? And then it comes down to attack that low, or that's going to be your target. And then you can risk a 15-minute candle high because it already had the buy side taken. It already had the premium. And then that allows you to, get around 5 to 1 in that range by utilizing the 15-minute. You see? And it repeats. This stuff repeats, folks, if you're patient enough to wait for that signature. And then you can see it ends up getting dusted. Just like that. Because you already did the work on the higher time frame, that is your draw. Premium, and then you can utilize the lower time frame shift, premium again, take it down to your draw. That's just market structure 101 right there. Using market structure and you're using liquidity to frame a play. And I'm going to show you a real-time example. So you see how that came down? Clean out that sell side there. Look, see that right there? And even that right there, you see how that filled the displace? Is that not the same signature? Is that not the same signature in here? The very next draw to be that imbalance. And that previous high right there from like the daily. If you go to the 4 hour, like I just said a moment ago, if you notice there's no higher time frame buy side being taken in here, you notice that? There's no swing point. So what can we do then? Go to your 1 hour. There's your 1 hour shift. So into next week, if it can manage to pull back here, you could play that range and then take it up right there. That would be valid. See what I mean? If you want to get a little bit bigger winner, you can also go down to a lower time frame and then look for a lower time frame shift. Same process I just talked about a second ago with the previous example. That is a confirmed 1 hour shift. There's no higher time frame buy side or anything being taken in there. You have that opposing draw, the daily fill to displace, same exact signature. So that's what you can look for into the coming week. Okie dokie. Also, if you want to join the free Discord, folks, there's a link to the free Discord in the video description below. But when it comes to like futures and everything, I keep that strictly for the mentorship chat. I plug my Forex stuff in here if you want to be a part of that and get access to all my Forex plays in here. And I have like free educational YouTube material like in like specific sections in here that you can look at as well. But yeah, for the folks that do want to join, there'll be a link to that. There'll be a link to that in the video description and also the comment below. Okie dokie.